Good morning, everybody. Welcome to another episode of Investing Bros. It's going to be a fantastic show today. Got a lot of stuff to talk about, a lot of big headlines, but we will start off with what that title is talking about and what that thumbnail has to do with. It was a great, and when I say great, I don't mean it for the reasons that the Congress probably wants it to be considered great, but I considered it a great meeting yesterday. The interrogation of old John Ray about FTX gave us quite a lot of nuggets about what Congress is doing, their lack of knowledge about the crypto space in general. We'll talk about more of that in just a second, but if you have not already, go ahead and smash that like button if you're excited for the show. We got a lot of stuff to talk about. I am joined by T. Shroom across from me. T. Shroom, how are you doing today?
If I was any better, vitamins would have to start taking me.
Whoa, there we go.
Yeah.
Shout out to Alex Green right there.
Exactly. I was helped out with that one a little bit, and I appreciate it.
Yeah, that is good. Are you out of breath a little bit there, T. Shroom?
I am a little bit out of breath. I'm in my recovery phase of doing 20 push-ups.
Yeah, like literally 2 minutes ago, he gets on the floor and does like 20 push-ups, and immediately gets up huffing and puffing. I'm like, wow, this is gonna be great when you introduce yourself. No, but let's talk about that for just a second. Let's talk about Congress. There were so many great nuggets. Go ahead in chat. I want you to put, if you were able to watch it, or if you were able to go back and watch it, or if you heard a lot about it, what was your favorite part of the whole thing? We got the infamous new, it didn't pump on it, but one of our congressmen owns 10 Doji coins. That was great. Pretty much we got to examine a live version of Twitter Spaces, the same amount of professionalism, the same amount of idiotic questioning. It was a great mess, especially there at the end when they left out one of the congressman's questions. What else happened? Let's see. One of our congressmen out in California, Sherman, he thinks the entire crypto space is nothing but NFTs, non-fungible tokens that he called pet rocks. So that's really interesting. And of course, our personal favorite, we're changing the name of cryptocurrency to Creepy Dough Currency. If you did not see it, T-Shroom, why don't you go ahead and roll the clip for him?
I wonder if you would support a resolution that I've been thinking about introducing, changing the name of cryptocurrency to Creepy Dough Currency. I'm going to discuss this with my colleagues. I think it's an appropriate name. I just wanted to know whether you would support changing it to Creepy Dough.
The lady behind him.
I'll leave that skill set to the committee.
When he's doing this, I can only imagine what is going through John Ray's head, because he's smiling. So is that smile a polite smile, like, oh, congressman just made a joke, let me smile? Is he internally thinking what the rest of us are thinking? Did that seriously just get asked by one of our lawmakers in the United States? If anyone was under the delusion that the United States Congress was going to have any type of real understanding to be able to create some common sense regulation for crypto anytime soon, we were very, very much so mistaken. Congress has a long way to go before we actually know what we're doing with cryptocurrency. T-Shroom, what were your thoughts?
Yeah, I also read that SBF's parents were present and they were like giggling and making jokes and stuff, which is kind of strange. I don't know.
I don't think that was at that was at the hearing. So because it wasn't. Yeah, there was a lot of stuff happening. Sam Bankman-Fried, for those who don't know, was arrested and then taken to a courthouse where he was posted no bail. He gets no bail. But during it, yeah, supposedly, this is what I was listening to last night. The parents, his mom was giggling every time they used the word fugitive. And his dad supposedly, well, it's like not like shaking, like pretty much they're uncomfortable. Like they're very uncomfortable with the whole thing going on, because guess what? They might be next. It'll be interesting to see how that develops.
Yeah.
But, we could probably spend a lot longer talking about those two fun meetings. But let's go ahead and move on. What are some other headlines we're going to be talking about later on in the show, T-Shroom? And then we're doing some chat engagement and then going into our technical analysis.
We're going to be talking about a major Japanese utility is working with local hardware makers to capitalize on excess power with crypto mining. So Japan making some common sense moves over there. A good little contrast to our policymakers here in the good old United States. We're also going to talk about the fact that SBF has been denied bail. We're going to talk about that and get into some more of the details of the developments in the SBF saga, because it's not over, guys. It's far from over. And then maybe you heard there's a little bit of a decision being made today by the Federal Reserve, the chiefs of our monetary policy here in these United States. And then we're going to talk about some other awesome economic impacts that we have been observing. And then we're going to wrap it all up, put a nice bow on top. Yeah. And we're going to do some TA as well somewhere in there.
I'm excited to talk about those data plots, the new points.
Oh, the dot plots?
Yeah, the dot plots.
Oh, you're going to love the dot plots.
The dot plots are going to be fun. Here's, I was just thinking about, before we jump in, we're going to engage some chat here in a second, and then we'll go do technical analysis. Every influencer out there and every single person who loves getting to watch some of these crypto YouTube channels like this one, we need to be thinking anybody we can and taking advantage of this. News has never been dry. This is a show similar to the last couple of shows. We could probably easily fill a 4-hour slot with the information and the news happening in crypto. There are going to be days again in the future, like there have been in the past, and some of you were there for them, where literally every single crypto influencer is just reaching and stretching and trying to find something because there's nothing to talk about. We have not had that problem for a couple of months now, but be prepared. Those days will come again. Not always a bad thing. Sometimes the price can do a lot of good things during those times, but there will be days in the future where we do not have a lot of news. These are not one of them. So we're going to do the best we can to fit as much as we can into 1 hour for today. But let's engage with you guys in chat. Let's see. First of all, we got almost 40 people watching, only 24 likes. We can get those likes up. I think some of you guys are just joining. You haven't smashed it there. Go ahead. That little finger, that thumb, the hand thing with the glove.
Yeah.
If you look at it, I think the hand only has 2 fingers, like 3 fingers. Like I think it has a thumb, a pointer finger, and a pinky.
Yeah.
Do
you like the like button, Tim?
I think the like button could have been a little better. Again, if you're looking at the size of the thumb, there's just not enough room for significant amount of fingers going there. Best case scenario, you're fitting 3 fingers into the hand portion.
Well, I know one thing I know is true is everybody's looking at the like button now to get a gander at what you're talking about, the design of the like button. And while you're looking at it, go ahead and give it a click.
Go ahead and smash it.
You can hit it. You can hit it 1 time, 2 times, 3 times.
Let's see who is here. We got Armzilla's here, Cryptex is here, Crypto Sec Guy, Tom Wilkes, Crypto Mini Bike. I'm definitely not gonna be able to read everyone's names. Elliot Locke is here. Welcome, guys. T Shroom is in the house, both in the building and on the chat. That's really cool.
Gosh.
Let's see here. I'm looking for any comments. Let's see. Liberty Above All is here. I did see Alex Green in chat said, Investing Bros, looking forward to today's stream. If we get 100 likes, T Shroom must shave his head and Tim has to grow a beard. It's only fair.
Yeah.
It's only fair.
I think that makes sense. I think it's time to shave.
It is time for me to grow a beard. I think it is about right. Let me know in comments, those who have not come in already, what are your guys' thoughts about that thumbnail? So here's our thing, and we're about to jump into technical analysis. T-Shirt makes the thumbnails, and he does a phenomenal job. By the way, I love the thumbnail, but when he first sent it to me, I was like, why did you just take like a severed head and put it there? And then when you look closer, no, there is definitely like a baker who's working with dough. And so he just took like a creepy face and put it on there. I was like, oh, wow, that went far. But maybe it was good. I don't know. Let us know. Do you think that creepy face was too far, right on point, or it wasn't creepy enough? T-Shroom should have gone for more. Like, what do you guys think about that thumbnail? It'll help us create some here in the future. Oh, my goodness. We're going to look at a couple coins here in just a second. I saw someone say Doge. I'll glance at Doge. I don't know if there's necessarily anything too interesting happening there to spend any type of time there. Tom Oak said the Homer Simpson hand that is being used for the like button. Yeah, I mean, you guys are saying it's a mitten. Yes, it's a mitten. But what I'm looking at is look at the thickness of the thumb on that like button, right? And obviously it wants to highlight the thumb. But look at how thick that thumb is compared to the width of the like, just look at a normal hand. I mean, maybe, I don't know. Do I have a fat hand? look at how fat this section is right here. I just muted myself. Look how fat that section is compared to the thumb. And I have a hitchhiker's thumb, major hitchhiker's thumb. That proportionally doesn't make it work. That is definitely, at best, a four-fingered man giving that thumbs up.
I think we're revolutioning a lot today.
I think YouTube needs to take a serious look.
Revolutionizing.
At what's happening here. Yeah. Cryptex loved the thumbnail, by the way. Smash the mitten, says Crypto JMP. Yeah, I mean, that's going to be our new thing. Smash the mitten. Well, let's go ahead and let's jump on and do some technical analysis. You can go to my screen here, T-Shirt. I'm going to start off by talking about something that I kind of talked about would happen yesterday, and sure enough, it did just that. Let's go all the way down to the hourly chart, and let's look at Bitcoin. So after this rally we had, I'm going to take off auto so I can move the screen. After we had this nice little rally, we didn't quite get up all the way to 18K, but I also said like there's a chance we didn't quite make it all the way there. We came a little bit below it, touching about 17,969. So that's about $31. And if you would count the 92 cents, we're sitting about $30 away from hitting 18,000, but we didn't get there. I said that when we cool off, because this is a nice rally, I said watch that 17,600 as a level for support. Not only would it be significant because that's former level of resistance, but also it would be bullish for Bitcoin to use it as support, because that is like, again, if those of you who have been following my technical analysis, I love to kind of walk you guys through what's happening here. Turning former resistance into support is like a football player breaking a tackle, running past the defender, turning around, coming back just to stiff arm him in the face and shove him in the ground again before going and scoring the touchdown. It's just the ultimate insult. So it's majorly bullish to turn a former significant level of resistance back into support. What I am interested in seeing is what do we do as we start to rally towards this 18K. The other part of this that I kind of was mentioning to you guys that is happening just as I expected was, remember I talked about how overextended we were on the RSI here. And I said, all right, we're overextended. That does not mean this rally is over. It does mean we're going to a cool-off period, but potentially watch to see if we come back down, both RSI and price, and then we start to make a rally back up towards it, setting up bearish RSI divergence. You guys look at that and tell me what you see. That is bearish RSI divergence. It's not over yet. I think we're still rallying here, and it's going to be interesting to see what the Fed does, because the Fed news, and especially the way Jerome Powell speaks about the future, we'll talk about that a little bit later in the show, would have a massive impact for kind of almost like a reset of like, all right, yes, we're overextended right now, but potentially there could be another reset where it's so bullish that the price continues to climb, even though we're already overextended to the upside. We'll keep our eyes on what's happening there. But right now, this is playing out just about exactly how we talked about it would yesterday. Now, again, we're massively overextended. This oscillator on Luxargo was telling us, hey, you got red clouds in here. You're not necessarily wanting to enter into a new long position right now. The way the RSI is setting up, we're setting up that bearish RSI divergence. Even out in the 4-hourly chart, we're seeing the exact same thing happen. We're overextended, although with this one, we're not working yet. So maybe that hourly chart is going to make a lot of movements, and we're working on a bearish RSI divergence happening here on the 4-hourly chart, where potentially what ends up happening is the price comes up here, we have another dip, and then we set a higher low, and then we end up coming back up to the upside. And at the same time, the RSI maybe goes a little bit higher, comes back down, goes a lot lower, and then it comes back up, setting up our bearish RSI divergence like that. So keep our eyes there. I'm not saying that necessarily is going to happen, but if we're going to see another bull rally, if we're seeing bullishness happen come from the Fed announcement today, that would be expected. And remember, this last thing I'm going to say about Bitcoin before we move on and just check on Ethereum and some others, more often than not, when we see something happen that is going to be bullish from the Fed announcement, the price actually starts to drop over the next couple of hours, and people start freaking out and wondering, why is that? It's just a little bit of a fake out so that some of these people, some of these smart money and whale investors can get a little bit better of a price so they can buy in. So don't be surprised if we get bullish, if we get that 50 basis points, and then we also get some bullish narrative, some dovish narrative that we're closer to the end than we might think, that he is prioritizing making sure the economy does not go into too much turmoil. Watch the price dip temporarily as people look for a better buy-in, and then it starts to rally once again. That's what I'm kind of keeping my eyes on for Bitcoin. Vice versa, of course, if we get kind of hawkish news, maybe the price actually spikes a little bit. Maybe the price spikes a little bit so that those whales and smart money investors can get to a point that they wanted to take profit on, maybe sitting at that 18,000, maybe a little bit higher than that, but then they'll take profit and will start to fall again. That's my predictions about Bitcoin price. If it's going to be long-term bullish, watch for a small dip first. If it's going to be long-term bearish, watch for a small rally first. Let's go ahead and move on, and let's check in on Ethereum, which was doing pretty much, again, another thing that we've been talking about is very significant. Let's go down to the hourly chart here. It is overextended, similar to Bitcoin, setting up some bearish RSI divergence right here, and it's doing it right at this level of resistance, which has been resistance ever since the all-time high back in November of 2021. So we have our touch here. We rejected, came back down. That's normal. That's fine. We came back up, and now we're sitting in a position where we're rejected right there as well with a red candle. This is a little bit different than what we're seeing over on the Bitcoin chart, where Bitcoin is starting to press through these levels. Ethereum is actually struggling a little bit below, but that has to do with that level of resistance. Let's keep our eyes the rest of the day. Can we get an announcement that pushes us through this line? Can we push through it before the announcement, or do we get pushed back down and we're going to have to push that down the road when we finally break through it? Those of you who don't know what I'm talking about, if we're going out to a longer time frame, let's go out to the 3-daily chart here. We have been in a falling wedge pattern on Ethereum for a while now. And again, I told you that resistance level goes all the way back to November. The support level goes all the way back here to September of 2021. Yes, we had a temporary breakout right here, but quickly came back in, respecting this line of support. It would be huge, and we're sitting at about the right place. Like traditionally, when you're looking at falling wedges, this is the place you're starting to look for a breakout. Doesn't mean we can't come back down and then break out down here later on the road, but it would make more sense to me if we're going to see a dip on Ethereum, actually to break through, have a nice little pump based off of this Fed news, and then come back down here and maybe we set a new low, not a new low, but we come back down lower. But what we're doing, even though the price is down, we're coming back to turn that former resistance into support, and then we end up having our takeoff down the road. That would make a lot of sense to me, but we'll keep you posted on what's happening there with Ethereum. Now, we're going to move over into Cardano, and again, Cardano is one of the ones that I love the project fundamentally. I have not loved everything we're seeing happening necessarily in the technical analysis. It is hovering around some resistance right as we speak, but something that we need to keep an eye on. I'm going to show you guys one more coin, and I'm going to get T-Shroom's thoughts here as well. We're going to show you one more coin after this, and then look at Dixie as well. This right here, this daily candle, is a sign of positivity. Why do I say that? Because anyone who is just trading, anyone who has no love or hate or anything for a project in Cardano, they're just looking for a good opportunity to trade, is seeing this candle right here that I have this red arrow on. This is a bullish engulfing candlestick. Traditionally, not all the time, I've definitely seen ones in the past where it doesn't happen, but traditionally, this is one of the strongest indicators, especially candle indicators, of a direction change for at least the next couple of them. What do I mean by that? Well, let's look at the last one we saw, an engulfing candlestick. Right here, this is a bearish engulfing candlestick, and of course, we had 1, 2, 3, 4, 5, 6, 7, 8 days of red candle, even though there's some green ones in there, really 8 days of downward movement after that confirmation in bearish engulfing candlestick. Just so you guys know, if you guys are learning technical analysis, to be an engulfing candlestick, one way or the other, the candle body opened and closed has to dwarf, it has to go past it. So in this one, it picks up right where it left off, but of course this green candle is a bigger close. But it doesn't just have to be a bigger body of a candle. It also has to have wicks that go both below and above. So if you guys are saying, oh, well, what about some other situations where we had some engulfing ones? And by the way, this plays out bullish, but I would not have called this a bullish engulfing candlestick. It did have 3 more candles of upward movement. But the reason I don't call this one right here a bullish engulfing candlestick is because, yes, the candle body is bigger, but look, the wick did not get quite as low. That is not as strong of a prediction. It is nice to see a big green candle. Don't get me wrong. You love to see them. But the really strong ones that traders look at, and again, remember, technical analysis is about the psychology of other traders and thinking and acting the way they do. Other traders who have no emotional attachment to Cardano are going to look at that candle and say, hey, that looks like a good investment for me to go ahead and make a trade on. Of course, they have to use the Fed news with this as well and make sure they're taking care of their risk. But this is a candle that could potentially, even with a red candle today, still see us have some green candles in the next little bit. Unlike Bitcoin and Cardano that are sitting at key levels, Bitcoin and Ethereum that are sitting at key levels of like, all right, this is some serious resistance. Cardano's sitting pretty low. It has a lot more room to the upside than some of these other projects. So for those reasons, again, I'm keeping my eyes on what's happening there. Another project sitting in a very similar boat. I know that was a long setup, talking a lot about bullish engulfing candlesticks, but I think it's really important, especially for anyone out there looking for a good spot to trade, a good spot to invest. That's a really helpful tidbit of information. Algo is doing the exact same thing. And Algo, again, it's one of these projects that it's disappointing. It's actually sitting, like literally yesterday, it hit the lowest it's hit this entire bear market. So I'm sure there's a lot of people, similar to the frustrations with Cardano's price, that are sitting here looking at Algo and saying, what the heck is happening, Algo? Like, what are you doing? However, I got to zoom back in now. I zoomed out too far. Oh my gosh, that did not even help. All right, give me a second, guys. This, there are sometimes, I know there's probably a better way to do this, but I hit the auto button like a lot of people want me to, and it doesn't do it. All right, we have our bullish engulfing candlestick. Don't need to go back into that. The other thing that we have happening here, and I don't know if I had that article up with me, but there was something that popped up this morning that there are banks over in, man, why did I not have that? I don't know why I don't have that. There were banks over in, I believe, Spain, but I could be wrong. It's in Europe that are going to be using Algo. And that is significant because, again, as much as the price is down, we got to remember things that Charles Hoskinson has said in the past about his project Cardano. He does not look at that price. He does not care about the price. He knows his team and his fundamentals are stronger than that. Same thing. That's what we have with Amazon back in the early 2000s when its stock was really down. A lot of people thought Amazon was on the fringe. It was going to die. Jeff Bezos said, listen, when you're looking at the price of a stock, that does not equal the quality and the product that we have. And sure enough, anyone who would have bought at that point was made very, very wealthy. So when I'm looking at short term, just as a trader / investor, I'm looking at this bullish engulfing candlestick saying that's a good sign. And I'm looking at some of the fundamentals that are building in Algo, not just short term, but these are going to be long-term relationships and trust put into Algo. I am liking what I'm seeing here. Doesn't mean we don't go down any further. That doesn't mean that. What I'm saying, though, is especially when you're trading and investing, if you're waiting for an 100% guarantee on something to move one way or the other, you're going to be waiting for forever. The best thing to do is look for opportunities like this. Look for some fundamental updates in the news. Look for some great things happening on the technicals. We're sitting at a support level. We have our bullish engulfing candlestick. We are the lowest we have been the entire time that we've been in this bear market. It is massively overextended. Let's look at some other things. We're sitting here flattening out on the RSI on the daily chart, meaning we're setting up some bullish RSI divergence. We're massively overextended for Lux Algo, saying it's time to buy. Let's even pull up the Lux Algo. I don't always do this every single day, but let's pull up our Lux Algo. We just got a buy signal here yesterday or 2 days ago on Algo. This is everything it's setting up for to say, hey guys, we could potentially be seeing a rally coming very soon. And look at this. If we were to just use Lux Algo and use this contrarian buy signal, it's predicting potentially a take profit level all the way up at 37.5 cents. Right now sitting at 22, guys. That is, I'm not going to try to do the math for you. If we just got to the lower level of that, that would be a 70% gain, a 70% trade. This is one of those trades and investments that a lot of traders, gosh, stop doing this to me, chart. A lot of traders look at this and say, hey, this is worth the risk. Let me go ahead and enter a small position. Now I got to mess with this chart and get all this stuff out of the way. Let me get into this position, and I'll set up my stop loss. If it goes lower, I'll be prepared. But there's not a whole lot lower that Algo can go before we're talking about it dying as a project. And as we talked about in that news like that saying, hey, we got some banks in Europe, go ahead and adopting it and using it for their platform. That's a level of trust in the project that you're not going to find all over the place. I believe in Algo long term, and this is just one more reason. T-Shroom, did you find that article by any chance, or did you see what I was talking about?
I absolutely did.
Sweet. Could you pull that up? Yeah.
Yeah. So
was it Spain? It was Italy.
Yeah. So Algorand to support bank and insurance guarantees platform in Italy. So so they're getting some partnerships for some on the ground. I don't know if it's operational or fully operational, but companies, but getting some good key partnerships here moving into the end of the year for Algorand. So definitely going to see some increased volume there on their blockchain. Yeah.
So that, again, for those reasons, I'm in on Algo. I like Algo. Let's really quickly because I got a couple minutes here. I'm going to look at a couple other charts in a minute when we get into stocks, but let's kind of get into that transitionary chart.
Let's do it.
The Dixie. Let's look at the Dixie real quick. I have a couple levels I am looking at to keep your eyes on when we're talking about the Dixie. First of all, the Dixie is the lowest it's been since it peaked out back here all the way. How high do we exactly get? I can't remember exactly. Around 114. A lot of people thought we were heading up towards 120, which would have matched if you go out to the weekly time frame. This would have matched highs. A lot of people thought we were going to go back to highs that we experienced back, a long time ago. Where are we? Got to wait for my chart to load here a little bit. Come on now. I mean, the chart just said no. The chart just does not want to load.
No, the dinosaur means it's not going to load further back than that.
That's not true. I use this chart all the time, and it goes further back than that all the time.
Well,
I don't know why it's doing that.
that's weird.
That is silly.
Maybe. Yeah, I don't know.
I have no idea why. All right. Well, you know what? Let's keep moving forward because that's what we do. These are levels that I'm keeping an eye on. First of all, I got a couple of these dotted ones showing lines of former resistance and support. So, of course, this green line is one. It's already been used. It was used as resistance back here, support right here. We used it as support again during this fall, but the other day was used as resistance. So keep your eyes on that level. If the Dixie is going to climb, if the dollar is going to climb, that's going to be a very important level to get back over and to reclaim as support. Currently, as we speak, we bounced off of this orange line, which is sitting at a level of support that we've been using now for a while. Of course, at the beginning, it kind of worked as a level of resistance, but it's been turned into support. So if we're looking and saying the Dixie's going to keep falling, this is a very key level that if the dollar falls below and cannot reclaim would be a massive win for said bulls of crypto market, bulls of the stock market. But another one is this red line right here, which is a key line on the Fibonacci level. Of course, it was used as support right here. Hasn't had too many levels, but when we pull up our Fibonacci, and I got to scroll out just a little bit here, go all the way back to this point. This is our 0.5 level. We just broke through. Right around that same dotted line was the 0.382 level. The next level on our Fibonacci is 0.5, sitting right there around 102 and 15 cents, 102.15. Watch that level as we appear closer to it. And sometimes you don't just stop at that level. You're looking at a former level of support. So I also had this last one around 101 and 9 cents down support line that we came to back in May of this year. These are the points that I am looking at and saying these will tell us a lot. And what I mean by that is if you are wanting for us to potentially continue to move at least sideways, if not up in the crypto market, then we're going to need to stay below that green line and probably go ahead and break below this orange one, start playing with the red and blue lines. If we're going to see a new bottom, though, if we're going to see crypto keel over and start to fall to the downside, what would happen more than likely is the Dixie climbs back above this green line and starts its own little rally over here. Again, I told you guys, I don't know why my chart's not uploading. I'm going to have to play with that after the show is over to fix that. But a lot of people were calling for 120, 119, 120 to come in on the Dixie within the rest of this market. So the fact that we keeled over at about 114, right below 115, some people were expecting us to go a little bit higher. We're going to keep our eyes on that. Just because we have some good motions right now, just because there are some bullish things coming in the space, does not mean that this is over. Again, if you were to go back and look at the history of Bitcoin in this last bull run, which a lot of us, this bull run was some early days for us. We had massive pullback right back here in January of 2021. Of course, we had the huge Elon dip where there was a lot of FUD left in the space. A lot of people thought we were going to crash and burn and go into a bear market back here, but of course we ended up rallying. The same way these things have happened, these massive dips have happened several times during a bull market. That easily could still happen on the Dixie. So again, we're going to keep our eyes on this. Those levels are important for now. But if we're hoping for the bottom to be in on Bitcoin, more than likely we're going to also need the dollar to continue to keep falling to the downside. T-Shroom, I'm going to go ahead and pass it over to you. Any thoughts that you have about the Dixie or about crypto as we start to get close to our market open this morning in the stock market?
Yeah. I mean, you want the Dixie to keep coming lower. You want the bond yields to keep coming lower. And we're going to see here in about a minute, the market open, we're going to see exactly how that all plays out. In terms of crypto, you're seeing, I'll go over to my my screen here. You're seeing a mixed open here. Crypto trades 24/7. There's no stop. So going into open, you're seeing Binance coin down 0.5, but you're seeing Ethereum up 0.7. So, it definitely a mixed open here. Matic coming in even, and Cake coming down. So the Binance names coming in lower, and that probably has to do with the massive amount of withdrawals coming off of the Binance exchange. Now, CZ has come out since then and said that money is coming back on exchange, but you can only assume that folks are looking. I was actually listening. Investopedia released some of their data, and they said that one of the top 5 searched things on their website of 2022 was cold wallet. So people are taking money off of exchanges and going into cold wallets. But so now we're looking at the market open here. We are now open. So the S&P is opening slightly lower, ever so slightly lower. Really too early to really get any kind of good data. The NASDAQ, I don't know if that's an updated number, but saying it's coming in up. No, okay. I was going to say, so the indexes are coming in mixed. There's no decision yet really on the direction that the market wants to take this morning.
It's sitting right there at that resistance level. It got a little bit above it, but of course closing down below it right now.
Mm-hmm.
Is it going to reject again? Is a good question.
Absolutely. So you're also seeing the same across the board in metals, precious metals, and silver and gold, really unchanged here at the market open. I'm not seeing really any big movements from any names in equities. Bonds coming in mixed and slightly to the downside, I'd say. Dixie also coming in slightly to the downside. Guys, we're really interested. Oh, okay. So oil producers are actually coming in pretty strong here. So this is Marathon Gas coming in with a pretty strong open on the day. This got the weekly charts pulled up here. Let's go to the daily. I was doing some long-term TA there, but yeah, so not too much, but the oil producers are leading the market this morning. As far as my watch list is concerned, there may be other sectors that are outperforming, but a big story here that we like to keep an eye on here also is UNG. This is U.S. natural gas prices, and this is coming in. So it's broken down through some support. But folks, what I'll go ahead and say is I think that this is probably a buy the dip scenario here. I think it's like what I talked about yesterday. I think that what's going to happen here in natural gas is that it's had this big leg down. I shorted it and was able to sell that short and profit, and now I'm long. And I what I'm thinking is it's probably going to get bought here because it's had a nice little effective test here of this midline. If you could draw kind of a midline between these two lines of support, it's kind of come up and it's kind of tested that, and now it's wanting to come back down and see, okay, now we can see what the upside here is after this big long move. Now what's the downside? And I'm thinking, even though it's broken through the support, I mean, this isn't a super meticulous line, and this also isn't like the most reliable line either, but it is a line. It does seem to be respecting this to some extent. So it's going to come down here. I think it's going to get bought here, and it's going to come back up. And from here, you can only assume that there's going to be really only upside, because now we're heading into the winter months, and unless there's we will know probably today if the natural gas prices are going to go ahead and test back lower and see what's down there for them. Because I'm thinking from here on out, it's just going to be up. Obviously, there'll be dips and winding and weaving on the way up, but I'm thinking it's going to be testing new highs time, and that's why more than likely, guys, I'm going to be buying this dip. But that's just me. Doesn't mean you have to. Doesn't mean you have to even value my opinion at all. But I will say, you're tuned into our channel for a reason. Am I wrong? So that is going to be our market open. And let's go ahead and let's take a look at some of the stories today. Tim, did you have anything else to add? You seen anything else on the charts?
No, tangential real quick.
Okay.
It's just Shannon Fowler, one of our very good buddies.
Is he giving you a call?
Who helped us set this channel up.
Let's see what he has to say.
He knows what time we go live.
Let's see what he has to say. Put him on speaker.
Shannon, we're live on Investing Bros. You want to say anything to the people?
Yes.
Keep it appropriate.
This is actually your first call-in.
Yeah,
it is.
I love that it's Shannon Fowler. Those of you guys who remember, Shannon, our marketing director over at Coffee and Crypto. Shannon, what do you think about the creepy dough market today?
Sorry, I'm having trouble hearing you. Hello?
Hello, you hear me?
Investing Bros?
Here he is. Here's a picture of the guy we've got.
What are your thoughts? What are your thoughts about the creepy dough market?
This is the individual.
The what?
The creepy. Okay, you didn't watch the hearing. Crypto. I'll explain later. It's fine.
No. I was calling to ask about Hasbullah.
Oh, you're calling about Hasbullah. Well, I don't. Okay, go ahead and ask.
So what's up with Hasbullah?
He's the fiercest predator in the world.
This is Hasbullah. I don't know if you guys know who Hasbullah is.
Because I didn't know who Hasbullah was for the longest time, and then I saw a picture of him about like a week ago. Why is he so small?
I don't know, Shannon, but we're gonna let you go. I'll talk to you later, Shannon.
That's hilarious.
All right, man.
That was not planned. That was not planned, ladies and gentlemen.
Oh my gosh, Shannon, what the heck? All right, interruption time.
Is over.
It's over.
We ready to
Hopefully
get into
you guys
these stories?
enjoyed that. Yeah, let's do it.
All right, so we're gonna start off with this story here. Major Japanese utility works with local hardware maker to capitalize on excess power with crypto mining. The utility behind the Fukushima nuclear reactor is trying out crypto mining. Wow. So they've got all this excess energy and they say, hey, what are we going to do with it? Let's mine some Bitcoin, baby. The utility has struggled to rebuild this business and reputation after 2011 earthquake and tsunami struck the nuclear reactor in Fukushima. And it was operating with proper risk controls. In 2012, the government later bought 50% stake in the company, 50.1, I should say. That gives them more control over it to make sure that doesn't happen again. Well, Tim, what do you think? You think that's a good move for?
Yeah.
I guess this is a public utility at this point if the government owns 50.1
I think other governments should follow suit. I think this is going to be one of those things that others do follow suit eventually when they realize the golden opportunity. Michael Saylor has talked about this before, how Bitcoin is not just revolutionary in the sense of its ability to be a decentralized currency, but its efficient use of energy as a value. This is going to be one of those things. Like when people say that Bitcoin is bad for the environment or things like, this is actually one of those situations where, no, this will help the environment. If we actually start using our energy accordingly for the value of currency, and it's decentralized, that will make the world a much better place, including environmentally. So I hope Japan is not the last country to actually start doing stuff just like this.
Yeah. Absolutely. Well, we will see how that unfolds. I also, look upon that headline favorably. I'd like to see where that goes. Well, we've got some developments here in the SBF saga. Sam Bankman-Fried denied bail in the Bahamas on FTX fraud charges. Judge cites flight risk. So The judge is afraid that he might make his way.
I don't know where he would go, though. Like, he's just about pissed everybody off.
Yeah. Most of the time, somebody would say, we hope he doesn't fly off to the Bahamas.
I was going to say, when you're trying to flee the Bahamas, that's when you know you're down.
He's trying to flee the Bahamas to go hang out with Kanye and Alex Jones, I think is probably what's going on here. But no, so back to the article here. A Bahama judge denied FTX founder SBF bail and said he should be remained in custody until he should be remained in custody. Is that grammatically correct?
Sometimes writers struggle.
He should be remained.
He should be remanded, reprimanded,
remanded.
Maybe is remanded a word?
Remanded. I don't know.
There's no I in there.
Yeah.
Remanded.
Okay, that probably. I'm just reading it wrong. It's.
I'm looking it up.
To custody until February 2023, citing a heightened flight risk for the one-time billionaire. SBF claimed that he was down to just 100,000, a stark come down for the former crypto titan. And then probably the biggest thing here is that his legal team is planning to fight an extradition order, according to NBC News. What you got, Tim?
Yeah, it remanded his word. So future tense or whatever of remand. Remand is to send or to order back, especially to send back a person into legal custody. Okay, so good job for that writer. And taught us a new word, remanded.
Yeah.
There we go.
We're getting into the real issues here, guys. We leave no stone unturned when it comes to analyzing the media. It's been an educational video so far. Making sure that these media outlets are not lying to us or using words
or using made-up words.
All right. Let's take a look at this Fed story here. 50 basis point hike is still 78% likely to go forward. Now, that's going to be coming out today, the 14th, at 2 p.m. Eastern Standard Time.
Yes.
So if you're watching this show and you're not awake yet, you make sure that you're awake for this. But yeah, I mean, this is bullish. This is something that's kind of, I would say it's probably priced in at this point. If you look at the SPY, you kind of see this is what folks are thinking, especially if you look at the Dow. So, that's kind of, what to expect today. And CNBC has also provided an article of some more things we can expect. So here's everything the Federal Reserve is expected to do Wednesday. Mm-hmm. So how convenient. Wednesday's meeting of the rate-setting FOMC will bring an assortment of moves to chew on. In addition to an expected half-point interest rate increase, investors will be watching how the central bank communicates its future intentions. So a little nod to the press briefing there after the decision. That press briefing is going to come at 2:30 Eastern Standard Time. Definitely want to be awake for that one, guys. There is no need at this point to continue hiking rates, but of course they will, RBC Capital Markets economist Tom Porcelli said. Now, Tim, do you think that they should stop cutting rates altogether at this point?
Should they? I don't know. I mean, that's actually interesting. And we've talked about this on this show before. In Elon's opinion, let's just start off with old Elon. He believes that a raise of rates of any kind would bring a severe recession. I think he's even so far, and again, he doesn't get a vote here, but he thinks that they should start cutting rates. So should they? I don't know. Someone asked me this on Twitter a couple of weeks ago after one of my posts, and they said, so are you saying we should? And I said, I don't know. Because obviously, if we cut rates, yes, that will help out with some economic issues that are developing. Whether you think we're currently in a recession or we're going into a recession, it would help keep some jobs alive. It would help keep from a global collapse of economy, or at least delay it off. But of course, it will continue to inflate the U.S. dollar, which is a problem. On the flip side, they keep raising rates. We start to fix this inflation, but people start losing their jobs in the masses. Trade starts shutting down because the value of the dollar is too high compared to other currencies, and they just no longer can operate that way. That's not good either. So when I say I don't know, I mean I am not a person who's studied enough and knows enough about the situation to know what the perfect scenario is. What I know is that Jerome Powell should have gotten more aggressive earlier this year. He should not have started off so dovish, saying everything's going to be okay, when everyone knew he should have been more aggressive. And if you want to go back even further, we should have never been giving out checks. If anything, even if we gave out checks, there should have never been a blanketed, hey, everybody gets a check. There were millions of people who did not need checks, whose jobs were completely fine, who could provide for their family, but yet they got the multiple $1,300 checks or greater. That should have never happened. But when we can go back to what Jerome Powell has control over, Jerome Powell had control back in January and February, and he didn't do anything.
Yeah.
He got very dovish, and that was a mistake. So moving forward, should they go lower? I don't know. But what I know is they won't go lower, and that's about, we're going to talk about that when we get to these dot plots here in just a second. Are you ready for that, or we have a little bit more to talk about?
Oh, I am as ready as I'll ever be with the dot plots. Are you ready, Tim?
I'll be ready as soon as I find where I put this sucker.
Well, I'll get into it here.
I got it. Here we go.
I'll preview it. So the dot plots and the terminal rate. That terminal rate references the expected end point for the Fed and its current rate hiking cycle. When the Fed last updated its dot plot, a chart in which each FOMC member gets an anonymous dot to project rate moves over the next few years, the terminal rate was pegged at 4.6. So that was at the last update. So keep that in mind. That's the number to beat here. 4.6. With inflation still rising, notwithstanding recent reports, the end point is likely to grow as well, but perhaps not as much as the market feared. Goldman Sachs said it's a close call between 5 to 5.25 and smaller rise of 4.7 to 5. We continue to expect 25 basis point hikes in 2023 at margin. Report reduced risk of 50 basis point hike in February. Signaling a softer approach could be dangerous, said Isaac, who was FDIC chair back in the early 1980s when inflation was raging. And then Fed Volcker had raised rates dramatically and pulled the economy into recession. And then the last quote here, people have to have confidence in the Fed, and that's what Volcker brought. He knew he meant what he said Isaac, chairman of Sakura Isaac Group and global advisory firm. If you don't have confidence in the government and the Fed in particular, it's going to be a long, hard slog. So you got to have confidence in the Fed there. So let's get into the dot plots. Did you want to pull that up? Or?
Yeah, I have it pulled up on my screen right now. I want to make sure it fits well.
Yeah. Oh, that looks great.
Yeah, I can zoom in.
Look at that.
Can I?
Tim is kind of our resident tech genius. So
some of you don't know how funny that joke actually is. So This dot plot right here, things that I had to learn about last year, there's a line right here. This T line is what the expectation was back in September. So kind of backing up, those of you who might not have been there, in September, they gave us a guideline. They kind of told us where they wanted to get to roughly. And there's other plots you can look at, but we're going to look at this one for today. This is the most important one. Their expectation was that they were going to get somewhere at about 4.65, something in that range, 4.63 or something, by the end of 2023. They wanted to get to about 4.35 here at the end of the year, then not have to go up really that much significantly, literally go up maybe another 25 basis points by the end of 2023. And then we can start our descent in 2024. And by the end of 2024, hopefully be back down below 4. And of course, as you guys can see going on this chart, end up all the way down here long-term back around 2.5. They told us before that is going to have to be a little bit higher than what currently is happening right now. So now the expectation, this is now what they're talking about here in December. They're going a little higher. They're actually going to go about 50 basis points higher expectation to end 2023. You might be wondering, well, what does this mean exactly? It actually ends up, being raised all the way up until 2025. But what this means is instead of the expectation that potentially we saw either a 75 basis point here in December or a 50, and then just maybe one more hike, which, by the way, just in case you guys are wondering, right now we're currently sitting at a place where we're at 375 to about 4. So a 50 basis point would take us to 425, 450, which would settle what they want for the year. But of course, that means that next year there's probably going to be either one big 50 basis point hike or maybe 2 25 basis point hikes. I do not necessarily expect them to dip, but if they do decide to dip, like let's say they took Elon's suggestion and started cutting rates right now. What's going to have to happen then is that you can go off my screen. Yeah, you're off my screen now. You don't have to. You don't have to be on my screen right now. If they take Elon's suggestion and they cut rates at any point, but they're wanting to stay on track of killing inflation by 2025 and when I say killing inflation, getting it back down to a normal level, they're going to have to end up at 485. So they can do one of two things. They can just do one 50 basis point hike in maybe February, maybe a 25 in February, and then a 25 in March, see how that goes. Maybe they just pause and wait till later in the year to see if they can give the recession any type of feedback. Or they could cut rates by like 25 basis points or 50 to give some relief, knowing and telling us, hey guys, by the way, this means later in the year, we're going to raise interest rates again. And we've seen that happen before. Some of you guys might know, let me see if I can find this one. It's going to take me a second to find it, so I'll find that here in just a little bit. We've seen this happen before during places where they're trying to tackle inflation. They will cut rates temporarily to bring some relief to the market, only to then spike them once again. And I'm going to throw it to T-Shroom to give his thoughts on it. And I'm going to find that chart for you guys once again to explain what I'm talking about. But T-Shroom, what are your thoughts about what this dot plot is saying?
Well, it's saying a couple of different things. And I've got it pulled up here as well. I think ultimately, folks are bracing. I'm hearing a lot of chatter that folks are bracing for Q1 and Q2, especially of 2023, right? And they're not getting into like higher risk assets. They're getting into more secure names like pharmaceuticals, like materials, and that's just kind of what people do when they're institutions and individuals when they're afraid, when they're less risk tolerant, when money is more expensive, which is exactly what the Fed is doing here with raising their federal funds rate, making banks charge more for money loans. That's at the end of the day, that's what this is. Now, what I think is that here's kind of the play is if there's any kind of resilience in Q1 or Q2 of 2023. And by resilience, I mean, the FANG stocks, Apple, Google, Amazon, if those guys can stay strong and maybe even grow, then I think this market is ready. There's so much cash in the sidelines. I think this market is ready to continue the movement to the upside because everybody's thinking bear going into 2023. Everybody's thinking bearish. Everybody's thinking pessimistic. So as soon as they're proven wrong, I think everybody wants to get back in the market and see some gains on their investments and for their clients. Everybody wants that. But right now they're feeling comfortable just saying, hey, clients, fiduciary responsibility, we have to reduce risk. And so, they're comfortable. They're just going to sit back and just collect their fees and be like,
Yeah.
it's all good. And then retail traders like us are like, well, I don't want to lose my shirt in this market. So I'm just going to maybe day trade, or I'm going to, go into lower risk assets and experiment with like the Disney names or the Walmart names, or the Dow Jones or, Dow Chemical. And I'm just not going to freak out. I'm going to, just let this one ride out. And I think what I'm expecting is, especially in the first few weeks of Q1 of 2023, if there's bullishness, I think it's risk on. It's going to be risk on heavy. And you do not want to be in cash during that time, because there's going to be so much ascension of the markets. Now, as far as crypto, I think so too. I think crypto, especially the big names in crypto, they're gonna launch. I think everything's going to launch, unless you start to get, blood in the streets, things get worse. Unemployment starts to tick up, then you're doing everything that everybody was talking about with bearish plays. The other thing I'm noticing is that in this, and we'll shoot back over to Tim here in just a second. Looks like he's found what he was looking for. Is 2024 is looking pretty bullish. So that's going to be a giant decrease in the federal funds rate from 2023 to 2024. It'll come back to about where we are now in Q4 of 2022. And then obviously from there on, it's going to be, the light at the end of the tunnel will become more and more apparent. But Tim, let's go back over to you.
Yeah, my point was, so going back to what I was talking about is could there be a chance that they lower rates only to spike them later? What we've been used to, I'm using this chart again, and you guys know I've been talking about this. This is a chart we were used about Fed pivots, that traditionally Fed pivots actually bring dips in the S&P 500, not rallies. But we've gotten used to it. In the last couple of times that we've had to raise some rates, we've gotten used to here in 2019, 2007, 2000, we've gotten used to them just keeling over. So like they raise them all the way up very slowly and then just make one decision to pause and then start to dip them. But going back to what we saw several times here in the, in the 80s and the 70s and 60s and possibly back to the 50s, this chart only goes back, I would imagine that's probably sitting around early 1960. You see several times during these problems, they actually start to slowly cut. Even this one right here, there's a cut right there. They peaked out right here, went back down, cut, had to rally, cut. Even in this one, they're rallying, cut. They actually started cutting rates only then to spike them. And when I'm looking at the significance, this looks like a 50 to 75 point rate, more than likely a 75 point rate. Same thing, rate hike. I almost said rake. I'm just pushing the words together here. Rate hike. Same thing back here in the 80s. Look at the dramatic cut they made with all these issues, but then immediately had to skyrocket back up, cut again, back up, cut. Went back up, not as high, but this type of choppy stuff we have not seen for a long time. Like if you're looking at these levels, it's just nice and smooth. They're either consistently raising, pausing, or cutting. They're not going choppy all back and forth. And I would imagine Jerome Powell does not want to replicate this. I think he wants to replicate these hills. But if the economy, and we're not just talking about the U.S. economy, we're talking about the global economy, is in absolute turmoil, maybe we do see things happen kind of like this. Maybe Elon is right in this basis. Hey, maybe we need to cut temporarily just to breathe again as an economy, which again is bad economics long term. Short term, it makes a lot of sense, Keynesian economics. But maybe we do have to do something like that so we can actually start breathing again. We will see. Let us know in chat what you guys think. Of course, long term, it would be just better to go ahead. Like to me, I'm like, hey, Jerome Powell, if I don't have to worry about jobs, we're not worried about the economy, why don't we just go ahead and get to that 4.85 level you want to get to right now? Like, why don't we just go ahead right now and raise 100 basis points, get it out of the way, and we're good, right? Give it a couple months like that. It'll tackle inflation heavily. Yes, there'll be a loss of jobs. Yes, the economy will hurt. Yes, but we can start recovering down the road. But that's not what he's going to do. I can tell you that. And also, it maybe the long term is not the right way to do, because you might just cripple the economy to where it can't even get back up. So a lot of questions of what ifs. And again, I don't envy Jerome Powell's position. I don't envy anyone in the Fed who has to look at what we're going at right now, look at the level of inflation, and also look at what the economy is doing and have to make a decision on this. But in the same boat, this is kind of the bed that they made by supporting and allowing the money to just get so inflated over the last couple of years. And then on top of all of it, when they finally had the ability to start raising rates again, they decide to say, oh, nothing's wrong. our economy looks good. We're going to push it off till next month. And even then, we're just going to do 25 basis points. Like, they should have tackled this and realized when you send out trillions of dollars in aid and you just print that money out of thin air, there are going to be consequences down the road. And that's what we're suffering right now.
Mm-hmm. Yeah. So my kind of conclusion on it is that they should keep raising rates, but by a decreasing amount. I think they should go 50 in December and probably 50 again in February, and then come down in March to 25. And if they think that they need to keep raising rates,
they don't. So if they do 50 in February, they don't. That would get them to their end goal of what they want. So more than likely, what you're going to see, January will operate like a pause month, because there will be no meeting, so therefore no rate hikes. They'll make a decision in February whether they want to go 25. Like, if we see a 50 in February, it's more than likely because they realized, okay, 4.85 isn't going to be good enough. We need to get up over 5.
That's what I'm saying.
That would be a 50.
That's what I'm saying. It's like these are dynamic rates, because I mean, they've changed this terminal rate. That's what we're reporting on, is that the terminal rate is changing here. So they change them, and it's based pretty much 100% off inflation, a little bit unemployment, but mostly inflation, a little bit GDP, mostly inflation. So if inflation, if this tick that we just got down, this print yesterday that was very bullish, showing that inflation is indeed going down, if that's just false, right? Or if oil spikes back up, or if shelter and food and other energy inputs start spiking up, then they're going to have no choice but to keep raising rates. And he will, and Jerome will do that. He's going to continue to do that. You know, and it's kind of pointless for me to think if inflation is going to come down or not. I mean, in the winter, you know, oil does get, you know, a little more scarce, and natural gas gets a little bit more scarce. But I think that that's not going to be enough to point inflation up. But anyway, that's speculating on inflation.
Yeah.
Ultimately, I think you do have to keep raising rates here. You don't do the Elon and just cut it. I think that's kind of a mistake. I understand where the CNBC journalist comes from with just pausing the rates to try and get an understanding of where they are with the economy, letting some of that data come in before continuing to raise or potentially cut. But ultimately, I think right now, the Jerome Powell has not positioned the market to anticipate a pause, and they haven't really pushed that narrative at all. It's really just been a CNBC thing, and that's fine. So I think you keep hiking. You reduce the hike, because that will bring some blood back into, you know, that will bring some blood back into the market. Some folks will see that as a signal to risk off. Or risk on, and that'll be good. But I think you get best of both worlds by keep raising, but reduce the rate of the raising, which Jerome Powell has produced the luxury for himself to make that option.
Again, it's just about a sure thing. The 50 basis points, by the way, because again, this dot plot is new, and it says the 4.375 that it wants. That is literally what the 50 basis points will get it to. It'll get up between 425 and 450. They pretty much have gone ahead and told us the number 50 now. So that's why today at 2, when you get the numbers, don't be surprised when it's 50. It's going to be 50. It's going to be interesting what he says, though, about what the new year is going to hold. That'll be interesting. But last thing I want to cover, because we got to close up here in 2 minutes. We had one more story that I was going to talk about here very briefly.
Go for it.
And that is something that's going to make a lot of you guys probably feel good about. I don't know why Shannon's calling again. He knows we have 2 more minutes. Liberal PACs, charities that got $260 million from FTX and its executives could be forced to give it all back.
Whoa.
Now, a lot of us think that there's probably a little bit more than $260 million there, but this is really interesting, because there's actually a precedence for just this thing to happen. Back in 2009, banker Alan Stanford's empire came crashing down when he was charged with running a $7 billion Ponzi scheme. Now, what ended up happening was everywhere that he gave money and donated money, they were actually sued and had to return it. This included both the Democratic and Republican fundraising committees, as well as children's hospitals. If children's hospitals are not off limits for donations from scams, nobody is, right? They literally took money from babies to fix this. So what you guys might be asking, like, how does this correlate? There's actually already been filings. You can go off my screen now because this article just kind of sums it up, but there's already been filings and things being sent out to try to get this money back. And we know it's legit because some of these Democratic politicians who accepted money are lawyering up to try to keep their money. So this could be very interesting.
Yeah.
If the Democrats or anyone, I mean, because it turns out there's Republicans too, if they can track that FTX sent money to anybody, it could get returned. This could be huge. And again, that precedent set back in 2009, even children's hospitals have to return the money, man, I think that could be very good for FTX holders in that hope of getting some of your money back. You might not get all of it, but it definitely will help a little bit.
Yeah. Absolutely. So that's going to be a really interesting story to develop, and Fox News and all, the conservative side, Ben Shapiro over the Daily Wire, they're going to have an absolute heyday with that. And the Democrats have served this up to them, to the conservatives. They've done the same, more probably far right has really pounced on the George Soros stories with those donations. They've probably gone way too far with those, exaggerating. I mean, some people might think they haven't gone far enough, but I wanted to add one more thing, because we kind of assume here 50 basis points is kind of baked in today, or it's what they're going to say. I don't know if it's baked into the market yet, but also what's important is the presser, right? So there's a little bit of coverage here from CNBC.
Okay,
they've got an opinion from the RBC spokesperson from RBC, Royal Bank of Canada. He said, Jerome, he should spare us the over-the-top hawkish antics. Say you're not done yet and there is more to do, et cetera, and leave it at that. He may not like the easing in financial conditions of late, but markets have eyes. So markets can see that inflation just went down, right? That doesn't mean it's going down eminently. It could tick back up, but markets see, hey, look, inflation is going down. A lot of really, really talented analysts already called the top here. I believe JP Morgan even called the top. Not here, like months ago, like in October, they said that was the height of inflation. So inflation, the height, more than likely here is in. You can't know 100%, but the rhetoric from the press briefing really is kind of like that's where the wiggle room is. If Jerome comes out and is like, okay, look, we're going to give them 50 basis points here, that's probably going to spike the market a little bit. So why don't I dampen that down with a little bit of over hawkishness? Hawkishness saying, now I'm giving you these 50 basis points, all right? But when it comes to Q1, if that inflation's back up, there's going to be hell to pay. We're going to go back up to 75. If he drops we might go back to 75, which he doesn't have to do. He can still do 75 in February if he wants to and not have to say it today. I think if he drops to 75, you're going to be shaking your heads, and I would pull out of those any like short-term long positions you had trading this event. But if he doesn't, in that press briefing, he comes in, he says, "Oh, not only going to give you 50 basis points today, I'm also going to give you a pat on the back and say, hey, we probably might even do 25 in February, or we might not even do a hike in February." So there's a lot of different ways that he could go. He could also start to reference other things. That's one thing that people forget. He could start to talk about Taiwan, a potential Taiwanese conflict, and how their monetary policy might need to shift for that. He could talk about the war in the Ukraine and Russia. He could focus on other things too. He could talk about chip manufacturers coming to the U.S. He could hit on some of these things that may lower or increase prices of inflation. And those could kind of signal things to the market that could make the chip manufacturers go up or down, or food manufacturers like Monsanto come up or down. Anyway, that's kind of my thought. Is also there's a couple things different to watch in the press briefing.
Oh yeah, there's gonna be a lot. We'll talk more about that tomorrow. We are over time. Really quickly, go to my chart because this is an update. We're gonna close out with this Bitcoin. Big breaking news. If you have not looked at charts, it is over 18,000 right now. So again, sitting right at a key level of resistance. This fulfilled that inverse head and shoulders pattern prediction we had. Will we keep rallying on this news? Are we gonna reject? Can the Fed announcement get us to push through? We will talk about all of this and more tomorrow. Thank you so much, everyone who joined in. If you have not already, smash that like button, subscribe to the channel, and hit that notification bell so that you don't miss a single piece of content. And the last thing, comment and share so that we can continue to get this out to more and more people. The Investing Bros is not going anywhere. We are a fast-growing space, and we are here because of all of you guys. We love all of you, and we will see you guys tomorrow. Have a great day.